Good morning, folks, and welcome to the pre-market insight for February 24th, 2020. Today we have blood in the streets. Let's find a way to navigate it. Let's go. So we're looking at a chart of the ES S&P 500 futures, and we are down just about 100 points, around 3 percentage points, which is probably one of the largest drops we've seen in several months, if not years at this point. Probably definitely within the top 5 drops we've had in the past year and a half, to be fair. And it brings into question this hypothesis that we've been talking about for the past several weeks now, where on the monthly chart we had what looked like a distribution bar at highs last month, the month of January. However, because of the bullish price action that we've had since then, one could have been led into forgetting about this possible thesis where we may see another bar that indicates there is going to be selling and possibly a reversal coming in the market. And so last week's price action, if we switch down to the lower time frame on the weekly, last week's price action was a harbinger for today's follow through. Again, in the market, anything is possible, but we always have to play for and position ourselves for what is most probable. And I think for most people, perhaps this move has caught them offside because they have been thinking, okay, listen, this is the type of bullish price action we've been having for quite some time. The coronavirus fears have been around for some time, and they have not really allowed the market to go down or to dip as a result. But again, we as active traders and or investors looking for the best asymmetric risk to reward opportunities must always be looking for signs. We're looking for clues that tell us that there's a change in the nature, change in the momentum, change in the direction of the aggressiveness on either side of bears, bulls, buyers, or sellers, market participants, so that we can position ourselves alongside with them. And so, how do we navigate and possibly mitigate damage and or make money from this? Let's take a look at some of the active levels that we have going on. So the monthly close is 32.27. So definitely the first number that we want to be looking at is 27. We can certainly have more weakness into the 27 very, very, very easily. I would look for the first 15-minute, first 30-minute, and first hourly bar are of crucial importance. Let the market come in. Do not at this point be a hero and have money burden in your pocket that you must go out and purchase something right away. Let the market come in. Let it tell you what it wants to do. Does it hold this 32.37 level, which was the prior month's open and the month before that prior month's close, or do we experience some further weakness into 32.27, setting up possibly a good buy opportunity and swing if we do see some market internals turning up, if we do see some buying strength come in that takes us above 32.7 and possibly through and to the lower side of this most recent range at around 32.80, another 50 points above. Today is one of those days that you need to be relying on your ability to spot relative strength and relative weakness. Not every sector, not every security is going to respond similarly. Some are going to go down with the market and going to continue going down with the market, while some will hold their levels and begin to move slightly up. If you are long biased, then definitively you want to be looking for areas of relative strength, both by sector and then individually by names. Will Microsoft, will Apple, will the Googles, will the Amazons, will the Teslas, will the Virgin Galactics of the trading world, will they hold their short-term intermediate ranges, their lows, or will they break with the market? And again, another important sign and signal for any real risk on behavior coming into these lower levels that we've been anticipating for quite some time. So focus today on relative strength and relative weakness. Keep it simple, smarty. Be safe out there today.